Coming on board, Siddharth Khemka, then he is the head of retail research at Motilal Oswal as well. Siddharth, hi. Let's begin by discussing Restaurant Asia and the entire QSR space because that stock is on fire today. 14% higher. We just spoke with the management of Jubilant Food Works as well. Sapphire, Devyani, how are you looking at the QSR space?
Clearly looks split as of now. We saw results from Jubilant Food Works, not that great. Same-store sales growth was not that strong. The outlook, at least for the near term, is a little bit modest, especially on the raw material front, where the expectation is of consistent, you can say, cost to remain at elevated levels, especially some of this raw materials like cheese, wheat. On the other side, we saw very good numbers, great set of numbers from Restaurant Brands Asia. They have shown growth on a same-store sales growth of more than 8%. The store expansions have been pretty good. And the outlook is pretty sanguine, both in terms of margins. They have expanded margins and they expect FY24 to see further growth therein. Similarly, if you look at some of the others in the pizza segment, they are also witnessing some kind of pressure. But again, on the other side, Westlife Food, which is McDonald's, that is also consistently witnessing strong growth. So I think it looks a bit segregated right now. The overall outlook on the QSR space remains pretty strong. We have seen that both out-of-home consumption and food delivery business both have picked up, and with games like the IPL, and we have the upcoming World Cup later this year in India, the consumption for the QSR services will remain strong. So overall outlook remains positive. But for Jubilant Food Works, the near term, 1 or 2 quarters could be under pressure. But definitely RBA continues to report strong numbers, and the view there is very positive.
ITC numbers so far?
Yeah, Nisha, so I think we were expecting about 13% volume growth in the cigarette business, which looks around 11 to 12%. But bearing that, if you look at the broad numbers, they have been pretty good, both in terms of margins as well as in terms of growth. So if you look at the overall net profit, it jumped 21%. Our expectation of about 4,700 crores, so it came at 5,000 crores, so much better than that. The margins, as I said, has been improving, and especially if you look at the non-cigarette FMCG business, we have seen the highest margins at above 10%, which is very heartening. So overall, I think the stock definitely has moved up in the recent past. We are expecting a good revival in the cigarette demand. The hotel business continues to do well, that we have seen across the sector, be it Indian Hotels, Lemon Tree, some of the smaller names reporting very strong number. We have seen occupancy, average room rates on record high levels during the March quarter. So that continues to aid the hotel business. And as I said, margins aided by lower input costs and attractive valuation. That makes us pretty much positive on ITC. That continues to be our preferred pick from a one-year perspective. Our target price is about 450. So at the current junction, as we heard also on the technical basis, the stock has moved up. Risk reward is not that favorable. Any dip could be a good opportunity for investors to look at to enter into ITC.
And what about SBI then? What's your view with respect to the numbers coming in from SBI? Because it didn't look particularly bad, but the stock is losing steam. Maybe some profit booking, you believe? Has the numbers and the performance peaked in your assessment?
Another set of numbers, great set of numbers from SBI, much higher than our expectation across. So if you see the net profit growth of 83%, it was 10% higher than our expectations, aided by strong operational business, also lower provisions. NI grew 29%, which was marginally in line with our expectation. Asset quality has been pretty good. The slippages have come down, NPA ratios have come down. The company made lower provisions. We heard the management, so outlook remains pretty strong. But what we are seeing is that margin expansions or the NIMs could normalize from here on. and the growth continues to be pretty strong. We are expecting, if you look at on an overall basis, we are expecting the business to be driven by retail growth, which is likely to remain strong. SME corporate segment has also been pretty stable. So overall, we are expecting the ROAs to improve over the next 2 years for SBI. So ROAs of 1.1% and almost 18% of ROEs. So that should be pretty good. If you adjust for the subsidiaries, on a standalone basis, the bank trades at less than one book. So definitely a lot of room for upside. Today's reaction could be more towards the up move that we have already seen in the stock price just before the results. But overall, very positive view. It's our preferred pick within the entire banking space.
Okay, that's a big disruption to happen with ONDC coming in. And what's the kind of upside you see? Because the stock has been around that 60 range for quite a while now.
Yeah, Nisha, I think there has been some chatter around the entry of ONDC, but what we clearly see is that it is at a very pre-stage level. It's restricted to one city. They have offering something like the first time free delivery. What we are looking at that the entire food delivery business in India is set to grow rapidly, as we have just seen last 2 quarters. Even Zomato has been turning EBITDA, adjusted EBITDA profitability is something that they are trying to achieve. Swiggy has just reiterated that ONDC's entry would only expand the overall market. What ONDC also does is that you need the delivery partners, you need platform players to plug into its platform. It is by itself not going to have the people or the restaurants, but there will be some other players. So definitely a challenge, but I think that should be positive for the entire space. Zomato by itself has been showing pretty strong growth. We are expecting almost 30% revenue CAGR over the next 2 years, driven by higher penetration, higher proportion of transacting users, and also the other businesses like, for example, Hypershore should show a stronger growth of almost 36% CAGR, and Blinkit should also start contributing meaningfully over the next few years. So our target price is currently at 70. We'll definitely review post the numbers tomorrow, but we remain positive and see that the entire food delivery business should see a strong growth, and Zomato being the market leader with 55% market share should be a key beneficiary.
Siddharth, we let you go on that note. Rudra as well as Naresh, you guys, thank you so much for taking the time out as well. Closing